In this video, I want to show you one of my favorite smart money concept trading strategy. I call it the 2 time frame rule. Anyone can use this strategy to trade either in the Forex market, the crypto market, the stocks market, or whatever financial asset you're trading. So let's get right into the video. For those of you that are new to the smart money concept, you can find a lot of videos about smart money concept on my YouTube channel. Let me briefly just give you an overview and a summary of how the smart money concept works. So there are basically 3 major things that the smart money concept is built on. The first one is structure, the second one is liquidity, and the third one is institutional reference points. All these 3 things I mentioned are very important. Let me just briefly explain how they work for you. Structure is simply when you see market moving and creating an uptrend or a downtrend, or you see market moving in a ranging market. That is consolidation. So in an uptrend, we have a formation of structure like this. We have this, something like this, a higher high, a higher low, a higher high, a higher low. So what this is doing is that it's creating a trend continuation pattern, taking out liquidity above these levels, creating new structures, moving like this. So this is one of the ways market moves and creates structure. And why is this happening? Is because of liquidity. Liquidity in one word simply means money. And why is it money? It is because the financial market involves money, but big institutions and retail traders are trading because of money, and the trend is moving because money is being pumped at a particular level to push price to another level. So when you see price move from here to here, is because money was pumped into it to push it to that level. An institutional reference point is basically areas that these institutions, the bigger players in this market, put in huge monies. It can be in form of order blocks or liquidity void or fair value gap, breaker block, and so many other institutional reference points that you want to know. If you want to know more about that, you can find them on my YouTube channel. So what you see right here is an uptrend. So when we want to trade with this 2 time frame rule, get it right, we want to use this information: structure, liquidity, institutional reference points. So let's go to our chart right here. This is an example of an uptrend. We see market coming from here, and there is a change of character. Market move to this level, up to this area. So if you want to trade in this kind of condition, remember, you must always trade in the direction of the smart money. In the direction of the smart money. If you are seeing a visible uptrend, make sure you are taking a buy in that kind of situation. If you are seeing a visible downtrend, make sure you are taking a sell in that kind of situation. Do not trade against the trend. So what we see right here is basically an uptrend, and let's assume this has not played out. Look at this. Let's assume everything here has not played out, and I have 1 hour time frame right now in this particular trend. This is the 1 hour time frame. Let's map out what happened right here. Break of structure. Can you see break of structure? At this point, we saw the body of the candle pushes above the last high that was formed. We had a break of structure. So what we are looking for at this point, we wait for price to retrace back to find an institutional reference point. Remember, I said an institutional reference point can be in form of an order block, which is this last red candle that price printed before moving, or a fair value gap, which is an imbalance that was created at this point, the difference between the high of this red candle and then the low of this third candle is called your fair value gap. There is an explanatory video on my YouTube channel on that. Check the playlist under smart money concept. Look for a particular video I titled fair value gap. You're going to see it. So this is the fair value gap, the difference between this and this. So these two we mapped out. We expect price to retrace back into it because it peaked liquidity above this high. Remember, when price moves, it picks external range liquidity and come back to an internal range liquidity. So we are waiting for price to come here, and then we take another buy. But how do we take our buy? This is where the 2 time frame rule comes into play. We will now jump from 1 hour to a time frame lower than 1 hour. if you are looking at this chart from the 4-hour time frame and you see something like this, you will jump down to either 1 hour or 15 minutes. But since I have the 1 hour, I will jump down to 15 minutes. After marking this area, I'm expecting price to come. That is so that I can reduce my risks and then find a sniper entry to take that particular trade. So I will jump to 15-minute time frame and then look at that particular level and take trade with it. So look at this. This is the 1 hour fair value gap. This area, you can see where I put these lines in between this. Now I will further refine this particular entry. Since I have seen this, my order block is here. Remember, this was the 1 hour order block. I can literally see that particular fair value gap. So remember, in that retracement, the major trend is an uptrend, and this retracement, to people trading in either 5 minute or 15 minutes, this is an entire downtrend. And if you are seeing a downtrend, you don't want to trade against the trend, because this is, look at this, lower low. Okay, it has broken structure. Another structure has been broken at this point. I hope you're understanding this. If you don't understand what I'm doing, make sure you ask me questions. So the next one is this. We did not create any low, but we have created a lower high at this point, because this low is lower than this. So this place, we see that we have broken structure at this point, which means we have aligned with our overall trend in the 1 hour time frame, which is an uptrend. This is a change of character, a shift in market structure. We have broken this. We will expect price to come back to an institutional reference point. Remember, institutional reference point, fair value gap, order blocks, or a liquidity void. Look at this. This is a fair value gap at this point. After that change of character, this one, we have price printing coming back to this fair value gap. Look at this. This is the fair value gap. When we see this, okay, and this is an order block. Look at this. This is an order block. When we see this, this area is where we take our trade. Your entry must not be at a specific level. It must just be an area. This is an area of entry. Why? Because we have an overall uptrend. We see a retracement, which is a downtrend, creating lower lows and lower highs, and then there is a change of character. There is an alignment between the lower time frame trend and then the higher time frame trend. That's after we have dropped down to the 15-minute time frame from 1 hour. This is the 2 time frame rule. You must not go away from 2 time frame. And then this is our entry, low risk entry. If you put your stop loss below here, you have minimized your risks and you have gotten a good entry. So if we go back to the 1 hour, instead of entering this trade at this level, which is more riskier, and putting your stop loss here, you have entered at this point, which is better, far better for you to enter at that point. Okay, I hope you got this, and then you take out your take profit above this level, this area. Let me just enlarge it a bit for you so you can see. At this area, this is your take profit. And then the next one that happened, let me delete everything and so we can see another one, and you're going to get a very important part of this lesson. Look at this. This is another order block here. This is another order block. After that one has happened, we have another order block, and price has traced back to this level. Let me reduce it so you can see what I'm saying. Price has traced back to this level. So this is our area of interest. This short term, downtrend, we're going to go down to the 15-minute time frame and monitor it so we can have an entry. Look at this. We see lower low, lower high, lower low, lower high. Look at this. What I'm saying is properly seen at this point. The last low that was formed was at this point, and we had a change of character. We have a change of character right here. Price actually changed character and came back to this order block. Okay, came back to this order block. So this is where we can enter trade, assuming this has not happened. Look at what I'm saying. It broke this level, changed character, came back to this order block, and this is where we enter our trade and have this movement to the upside. Let me reduce this and make it more clearer so you can see. If we go back to the 1 hour time frame, you're going to see what I'm saying. So go ahead and check your chart and see how you can use this strategy, back test it, see it time and time, and then you're going to have a very good way to trade in the forex market with this particular strategy. Even if it is this particular order block, this bearish order block that you want to take trades from, you can simply go to the 15-minute time frame and look at what is happening. You can see what is happening right here. Price coming back to this level, change of character at this area. Okay, and then you always wait for price to come back. You always wait for price to come back. It's coming back to this fair value gap at this point, this particular fair value gap. At this point there is a fair value gap, so you can choose to enter your trade at this point, and then your risk is at this level. It must not be a specific point. Remember, the entry, you are just trying to minimize your risks in this kind of entry. So your entry is at this point, and then you take trades like that. Guys, I hope this video is helpful. It's just a short and brief tutorial for you to see how to use this strategy. Make sure you look out for some of the videos I've made and subscribe to my YouTube channel. If you have any question, make sure you ask me in the comment. Thank you for watching. See you next time.